Hello, I'm James Mills and you're watching CATEX TV broadcasting live from Princeton, New Jersey. Time is currently 11:30 a.m. in New York, 4:30 p.m. in London and 12:30 p.m. in Hamilton, Bermuda. We have no main news today. We have no breaking news today, so we'll go straight to our main news. Troubled Bermudian reinsurer XL Capital has been dealt a further blow in the build-up to key 1/1 renewal with downgrade of the counterparty credit and financial strength ratings of its core operating subsidiaries by Standard & Poor's from A+ to A. The agency has also downgraded the parent company's counterpart credit rating from A- to BBB+, and continues to hold a negative outlook on all ratings. In a statement, S&P said it had taken the first action because it believes the reinsurer's competitive position and subsequent underwriting performance has been damaged by, and quote, perceived franchise issues stemming from a string of material earnings and capital charges over the past several years. In Germany, German insurance giant Allianz has called an early redemption of its pioneering $150 million Blue Wings cat bond, just 18 months into its more than 4-year term. A Class A floating rate notes, the first to cover UK river flood as well as US and Canadian earthquake, will be redeemed on the 10th of January 2009, 3 years earlier than the original maturity of the transaction. Under the terms of agreement, Allianz will repay an additional 1% to the outstanding $150 million principal amount, according to ratings agency Standard & Poor's, which maintained the BB+ rating on the notes. The Blue Wings transaction was underwritten by Swiss Re Capital Markets, with Swiss Re Financial Products as total return swap counterparty to the transaction. Allianz had a reinsurance program in place to transfer the underlying risks to Swiss Re, which in turn passes the payments to Cayman Islands registered special purpose vehicle Blue Wings Limited. Allianz has terminated payments under the reinsurance agreement with Swiss Re, leading the firm in turn to terminate all counterparty floating payments, triggering the early closure of the transaction. It is unclear why the transaction has been terminated, although the notes have been trading at distressed levels in recent weeks, with certain broker-dealers quoting a price of around 83% of par, according to sources. Market commentators suggest that Allianz may have cancelled the bond due to structural concerns, following the Lehman Brothers collapse and heightened scrutiny of bond collateral and counterparty credit risk. Allianz and Swiss Re were not available for comment at the time of going to press. Meanwhile, still in Europe, AXA SA, France's biggest insurer, cut about 4% of its US subsidiary workforce after slumping markets hurt returns from stock-based retirement products. The firm eliminated a little more than 200 positions at AXA Equitable Life Insurance Company. Chris Wannes, the spokesman for the US unit, said today in an interview. AXA, which has offices throughout the US, joins life insurers Prudential Financial Inc., Principal Financial Group Inc., and Hartford Financial Services Group Inc. in announcing job cuts this quarter. Paris-based AXA reported a strong reduction in third-quarter earnings from annuities in the US amid the market drop, Chief Financial Officer Denis Duverne said on November the 6th. The Standard & Poor's index, which fell 25% from September the 30th through December the 12th, is headed for its biggest quarterly decline in almost a quarter of a century. The slump has forced insurers to hold additional funds in reserve to back annuities that promise customers guaranteed returns. Amlin plc in London has successfully raised the £50 million, that's British pounds, in third-party capital from names it targeted for its new quota share syndicate. The Lloyd's reinsurer said the transaction has been approved in principle by Lloyd's franchise board and is subject to final administrative arrangements. As first revealed by the Insurance Insider, the special purpose vehicle, a special purpose syndicate, SPS, is being launched to underwrite a 15% quota share contract of the excess of loss reinsurance account of Amlin's Syndicate 2001. The vehicle will write net with no reinsurance for 1-year tenancy. In a statement, Amlin said the transaction provides it with additional reinsurance capacity for 2009, following Syndicate 2001, quote, to take advantage of strong opportunities in the key peak zones in the US, Japan and Europe, despite the dramatic fall in value of sterling. The reinsurer said the SPS also provides it with an alternative retrocessional cover should capacity for that form to cover prove to be scarce. Credit default swaps could be regulated in the future by multiple agencies, including the Federal Reserve, the Commodities Future Trading Commission, and the Securities and Exchange Commission, New York Insurance Superintendent Eric Dinallo said Friday. I think if you have 2 or 3 or 4 adequately capitalized regulated exchanges, that would be fine, Dinallo said during an interview. Credit default swaps are unregulated derivative products that have been blamed for spreading the risk of bad mortgages and weakening the global financial system. The swaps are used to protect against a borrower defaulting on its debt or to speculate on borrowers' credit quality. Government regulatory agencies and exchanges are currently working on creating a central clearing infrastructure for this market, which has been estimated to be worth somewhere in the region of 47 trillion US dollars. Swiss Reinsurance Co. has little exposure to the alleged fraud carried out by hedge fund manager Bernard Madoff. That is being investigated in the US. Swiss Re, based in Zurich, Switzerland, has no direct exposure to Madoff-related funds, and only an immaterial indirect exposure amounting to less than $3 million US through its hedge fund investments, the reinsurer said in a statement. Insurers and reinsurers are continuing their investigations into whether they are impacted by the Madoff funds. Another Swiss insurer, Ballhäuser Holding AG, has said it will write down $13 million as a result of alleged multi-billion-dollar fraud, while Zurich Financial Services said it had no Madoff-related investments. Well, let's hope that everything is cleared up fairly soon and that this doesn't have too much of an impact in an already deteriorating economy. Anyway, now we'll go to a quick commercial break and a word from our sponsors.
Less than 6 weeks after you recycle a metal can, it's ready to use again as part of a car, or a train, or another car, or a plane, or another car. Your recycled can could become part of your fridge. It could even save the energy to run your fridge, or just possibly, it could be another can. Recycle. The possibilities are endless.
Goldman Sachs suffered its